Well, markets love certainty, and right now there's none of it. Inflation, it's still biting, and the RBA is backpedaling, and buyers are trying to make sense of where real value sits. So let's unpack it. Hi there, folks. It's Matt Hayson here, looking at everything impacting Sydney's property market this week. Let's start with the cash rate. For a few weeks now, I've said that quarterly inflation would be the key data point guiding the RBA's next move. Unemployment, well, that ticked up this month, and that gave some hope of a rate cut in November, but it's inflation is the one beast that the RBA keeps trying to tame, and once again, they've missed the mark. I've mentioned before the RBA's forecasting record is horrific. Inflation climbed in the US, it happened in the UK, and you guessed it, it's now happened here. Even a quick look at your own living costs shows that everyday items, well, they're still climbing, yet this bloated, bureaucratic blob of an institution full of high-paid economists got it wrong again. Even Michelle Bullock herself said that if inflation came in at 0.9% for the quarter, it would be a material miss. Well, CPI came in at 1.3%. That's the biggest quarterly rise since March 2023. Now, trim mean inflation, the RBA's preferred metric, that rose 1%. So yes, it was a big miss. CBA, the nation's largest lender, has already called it. The rate cutting cycle is over. They'd forecast one more cut in February. That's now off the table. Money markets are pointing to a final cut in mid-2026, but by then the world will look completely different. So it's basically pie in the sky stuff. Realistically, we're not going to look at any further cuts through 2025, and that's going to shape how November sentiment unfolds. Now, we've always said sentiment fuels markets. It's not just about the numbers, it's about how people feel about them. The tone from lenders, that can also have an impact. Are they saying rates are easing, deals are good, or are they now saying cuts are over, be more cautious? Now, while a 25 basis point cut doesn't transform borrowing power by that much, it does shift the mood, and moods move markets. So we'll need to let this latest data wash through. Because Sydney was already delicately poised, a rate cut would have added confidence. Instead, we've now got another layer of caution just landing as the Sydney auction clearance rate is cracking to the downside. That's right, last week there were 1,311 Sydney homes scheduled for auction, and the clearance rate, well, it was 49.2%. That's the weakest spring result so far, and it is a price sensitive market. You can just be 5% above where buyers see value and they'll walk. Bring pricing back into alignment and suddenly energy returns. Buyers move, they engage, and they are competing. So as we close out October, it is an interesting space. Listings, they are healthy. Auction results, they are weaker, and rate cuts are now off the table. It's a clear path now though, but you've probably got to play it smart. Prices are too high, and November is going to be a hard month. Get it right, and competition will fire. So overall, on the CH market move meter this week, I'm calling it. It's a 6 out of 10 market. Buyers hold the upper hand now. Good opportunities there, but sellers, they must get pricing spot on. So that's a wrap. As we close out October, we've got some stunning properties on the market, and they are price engaged. That's the important thing, and I look forward to seeing you out and about this weekend, and I will catch you all next week.